Ravi Dharamshi is a market master of the day. He's Chief Investment Officer at ValueQuest Investment Advisors. Ravi, good morning. Great to have you with us here on the program. And I think it's a very appropriate time to have you on as well, because you've been a big believer in this energy transition theme, right? New energy, renewables. One of your big ideas has been Praj. We've spoken about this at length in our past interactions. So let me just ask you for your reaction to how you see the change in regulation that we saw for ethanol. No cane juice for ethanol. It's for a limited period, but it's caused a fair bit of anxiety amongst investors, both in sugar stocks and in names like Praj, etc. as well. As a big believer in this theme, what's your take, and what would you do here now?
Good morning, Prashant. Thanks for having me. Without commenting on any particular company, what I would like to say is that this year, of course, a couple of the major sugar-producing states, Maharashtra and Karnataka, have had deficient rainfall. So that is going to lead to a significant reduction in the coverage area for sugar. And that can lead to some sort of a shortage in the future. Hence, government is being proactive by cutting down on the production of ethanol from the molasses route. However, just to point it out, incrementally, all the new capacities that were coming up for ethanol production were already moving towards grain-based production. And in fact, I would say the story going forward is going to be less and less about the first generation ethanol being produced from sugar and molasses, and it is going to be about second generation, where it will be produced from agri residue, forest residue, and those kind of feedstock. So the company in question that you're talking about, or in general, the biofuel story of India, is more about multi-feedstock and multi-output. So I don't think this is anything more than a minor blip in the current numbers.
Oh.
No, so nothing changes in that sense, because I mean, the point is you would also have to bet on. There are various ways, right, in which this transition will take place. So in that sense, I mean, again, as you said, don't want to press you on stocks or anything, but you would continue to believe in the names that you own. You would probably add more at lower levels.
So, Prashant, energy transition remains one theme that we very strongly believe in. World has no choice but to move away from fossil fuels, move towards renewables, and move towards circular bioeconomy, essentially using more feedstocks which can be recycled. So I don't think there is a choice as a humanity that we have. But it is various technologies are at various stages in terms of commercialization, in terms of adaptation. So there will be fits and start, no doubt, and there will be times when there might be tightness in the older technologies like fossil fuel as well, which can go into shortage. But it is more likely to be a shorter-term phenomena than anything. Over a longer-term period, we have no choice but to move towards newer technologies. So in that sense, for example, second-generation ethanol is still a technology that is not commercially viable. But at the same time, the motivation remains high. The intent of the governments, the policies, and the money that will flow towards this eventually has to bring the cost down. So we are moving toward in that direction, but it will probably take some time. Sustainable aviation fuel is another technology. For example, even electric vehicle requires a lot of infrastructure build up before the adaptation can start. So I think various technologies are at various stages of adoption.
By the way, the market is picking up now, so don't lose sight of that. The Nifty is now above the 21,000 mark, quite effortlessly actually. It's building onto its gains. The Bank Nifty is the one that's charging ahead, 0.5% higher. So, we had spoken about this last week as to how now the Bank Nifty has to perform for the Nifty to stay well above 21,000, and that's pretty much what's happening. It was a 5.5% rally on the Bank Nifty last week, and now it's piling on some more weight. Ravi, hi, good morning, and thanks for joining in. You think now the time has come for some of these heavyweights, HDFC Bank, Axis Banks of the world, that haven't done anything in 2023? You think the time has come for them to perform, and how are you feeling about this space now?
Morning, Sonia. I think I do tend to agree with your assessment over there that the time has come, and allow me a few minutes to explain why I feel so. So, post-COVID, we actually did a great job managing COVID as well as managing the balance sheet. The result of, at that point of time, we were all cribbing that, government is not doing enough to provide fiscal stimulus. to help the economy revive. But today we are in a better position because we didn't bloat our balance sheet at that point of time. So our inflation is also in check and our balance sheet is also still not out of shape, which most of the developed world is facing today. So from that point of view, India was already a relative outperformer in the world, but most of this relative outperformance was driven by domestic flows. Now that is going to change going forward. One of the reason why the foreign flows were kind of not coming to India was kind of uncertainty. We are too close to the central elections for next year, and there was uncertainty regarding whether there will be political continuity and stability or no. Markets, like stability and continuity. So post the assembly elections, it has kind of the probability has moved in favor of continuity and stability, and that is why the markets are actually responding to that. FII positioning overall in the market, in the cash market, is at the lowest level ever. They own only about 16.6% of the Indian equities, which is a decadal low. Positioning on the derivatives market side has also been till very recently on the short side. Last 2 weeks have seen inflows of about $3 billion come in. And I think this is just the beginning of a longer term trend. And whenever FII flows come in, it eventually flows into the large sectors like financials and IT, because that is the space that bore the brunt of the flows going out. Now that is going to be the beneficiary of the flows coming in.
Okay. No, my question was more about specifically for the banks. So, I mean, this banks versus IT argument, right, that we generally have. Do you think banks will now take center stage, at least in the first half of the new calendar year? And if yes, do you stick with the larger banks, the HDFC banks of the world?
So, absolutely right. The larger banks, larger private banks are available at a really, really attractive valuation from a 5-7 year perspective. And this space still remains relatively a high growth area. 18-20% growth for some of the large banks is a very commendable growth over the next 3 to 4 year horizon. And when you look at the financial space globally, you will not find too many financial companies growing at this kind of a rate. So from a relative perspective, maybe there are some smaller banks which can grow faster, and don't rule that out. But this is the best risk reward available in the market, in my opinion, where money is easily going to flow into this sector, and there is going to be an outperformance of the large private banks going forward.
Okay, Ravi, just another theme which has done phenomenally well, which is PSUs, right? And it's been described as the leader of this bull market, and it has been so far, and perhaps many believe it will continue to be. What are your thoughts there, and what are the PSUs, of course, is the common thread across a range of companies in different sectors. But do you believe that? And where do you find the maximum opportunities from here in that space?
See, I am not a believer in that a particular sector should go up because it is owned by government. No, there are certain, even within PSUs, there are different themes. One is, kind of extremely cheap valuation. Second is some improvement of some efficiencies. And third is there are some businesses which are almost monopolistic in nature. So we are more tilted towards businesses which are more monopolistic in nature rather than towards kind of a reversion to mean trade, because the valuations were very attractive. Yes, it's a rising cycle, and usually all the companies tend to do well in that space. So even a company that does not have any kind of a competitive advantage in a rising scenario will do well. But there will come a time where, as you were mentioning before we started speaking, that there will be separation of men and boys going forward, because the NIM pressure will start showing the I'm talking about the bank specifically, but ability to gather CASA, ability to open up branches, execution, ability to adapt to the new digital age, all that will come into the reckoning going forward. Also, some of the PSU banks are actually levered almost 15-18x, and it is not a choice for them. Yes, the first QIP for the PSU bank got off to a flying start. They got a lot of demand, but it is more a need, and it is not a luxury. They are raising capital to reduce their leverage. It is not the growth capital that they have. So I am not going to paint every PSU with the same brush that, okay, it's a PSU, this is the market of PSUs, let's buy PSUs. I have to be first excited about the business. Then it doesn't matter to me whether the business is owned by government or is it privately owned.
All right. By the way, just want to mention that the Grand Old Index, the Sensex, has hit that 70,000 mark. So big milestones really coming through. We generally look at the Nifty we scrutinize the Nifty, but don't forget that the Grand Old Index, the Sensex, also hit that milestone of 70,000. Ravi, I know you track the pharma space very closely, so I wanted your thoughts on what's happening with Dr. Reddy's. There is this US FDA note that has come through, and some of the observations seem like they're severe, according to some analysts. But if someone holds on to Dr. Reddy's for the long term, should they be worried?
So, Sonia, I won't be able to comment on a specific stock, but I can tell you, yes, there are some issues with the FDA compliance, and the FDA tends to constantly keep increasing the bar. So I'm not saying that these are bad companies or there are lapses, of course, but the goalpost has also been constantly moving higher and higher. So won't blame the Indian companies too much, but the main problem over in the pharma space is not that they have US FDA compliance issues, but it is also to do with the fact that the competitive intensity has been tremendous in this space. The buyers have consolidated in US and the sellers are actually fragmented. So the buying power has shifted in favor of the buyers. So the base business that these companies have of the oral solid generics constantly keep deteriorating on an annual basis by anywhere between 8 to 10%. So they need to introduce new products just to stay in the same place. And the problem with the Indian pharma space is that they have not invested enough in innovative R&D to be able to replace that pipeline of drugs with some blockbuster products that can take them through. There are some one-odd complex generics or one-odd inhaler or bio-generic opportunities, but no NCEs or great innovation coming out of India yet. And that has been a bugbear where their dependence on the commodity business still remains very high.
All right, Ravi, it was great talking to you. Always good to learn from you. Thanks a lot for joining in. Have a good week ahead and a great year ahead as well. Happy New Year to you and your team in advance. Thanks for being with us on the channel. Let's